So Paul, Aspen releasing results this week?
Yeah, half-year results. It's a June year-end, so these are for the year up until the end of December, half-year. Not bad, eh?
$2.42 a share?
$2.42, which is up 31% roughly on the last year, but quite difficult to analyze. There's quite a lot of noise in there. Remember, this is a company that generates about 5 billion rands worth of turnover every 6 months. And in the old days, that was all South Africa, but increasingly now it's international, as we can see.
And those are with high margins?
Yeah, no, look, these pharma companies really know how to make money. I mean, at the end of the day, when you buy a box of pills, you don't really pay much attention to what their production cost is, but it's not a lot. The South African pharma business, which is still the core of the business, I think it's about 40% of earnings, really did well because the rand got stronger. Remember, what they do is buy those active ingredients and then they do the local manufacture in Cape Town. They've also got plants in PE and in East London. So that business doing really well. Then there's the South African consumer goods, which is like the baby formulas and the Lennon stuff and toothpastes and what have you. That didn't do too badly, a little bit of recessionary pressure.
The formula plant burnt down, eh?
Yeah, that burnt down last year. They're busy rebuilding it now. It's just coming in line in terms of production, and they got a big payout from the insurer in terms of the payout in terms of the lost facility and loss of profits, which is partly why these results look a little bit better as well.
And their debt levels going down.
Yeah, as you say, big cash generation. The group, in fact, got a lot of its debt from one of the deals that it did in 2008, which was to buy a whole string of drugs from GlaxoSmithKline. They bought some stuff which was sort of old and off-patent from Glaxo, and this relationship with Glaxo is very important. So that deal was funded with debt, which came out in 2008, and paying that down is quite an important priority. They've still got about 3.5 billion rands worth of debt, so pretty high, but not unreasonably high for a company with this kind of cash flows.
And what's the outlook for the future?
Look, I think the key is this second Glaxo deal which was done. So in late 2009, they closed the transaction in terms of which Glaxo acquired 68.5 million shares from the company in exchange for some businesses which it put in. A whole lot of chemo drugs, also off-patent, the Southern African distribution businesses of Glaxo, and also a joint venture in terms of the South African distribution rights. So that's going to be key. It only came in for 1 month of these operating results, so it's going to be very interesting to see how it develops in the second half. The only little black cloud on the horizon is the South American business, which they were very keen on. They bought into it by virtue of a JV with an Indian company. They've now taken full ownership of it. They shunted out some of the production assets. They're needing to cut and tighten down in terms of costs and stuff there, but it's a good management team, and we reckon they'll be able to take it on. When you say earnings, I mean, R2.50 in the half year. If they make another R2.50 at least in the second half, that's R5 on a sort of 15 PE for a drug company is not unreasonable by global standards. Normally they're higher. That puts you at around the 75 rands a share price. It's climbed a lot, but we still think there's more upside there. $100.
100 rand a share?
100 by Christmas. Eh? 100 by Christmas. There you go.